Cryptocurrencies are correcting, so is the party over? We're going to examine that, plus a look at single country ETFs to give you a big picture view of what's going on with the stock market globally. Is the trend up or is it down? The answer to that question and much more right after this. I'm DeLegge with ETF Guide TV. Thank you so much for joining me. On today's episode, we're going to examine the global trend in stocks. I'm going to tell you which areas of the U.S. market are performing the best. You know I like to analyze the market from several different angles. That's why we're going to look at the trend in sector ETFs. We're going to see what that's telling us. Plus, I've got a special guest on today's episode. Dave Kreinces with ETF Portfolio Management will be joining me. We're going to discuss the trends in Ethereum, Bitcoin, as well as technology ETFs like QQQ and TQQQ, so stay tuned for that. If you're here for the first time, please hit the subscribe button. That way you won't miss any of our outstanding programs like this one, as well as ETF Battles and the others. Also, do not forget to comment. I love to interact with the audience, so post your thoughts below. If there's any questions you want to ask me, feel free to do that. Also, any observations about the show or programming that we have here on ETF Guide TV, again, hit that comment section below. Also, thumbs up if you've been enjoying our content. Also, I've got viewer resources in the description section below. Now, if you have not had a chance to visit there, I encourage you to do so. I've got online classes, I've got free ebooks, I've got a portfolio grading service where I'll analyze and grade your investments. So I encourage all of you to take full advantage of these tools. I, of course, do this because I want you to achieve your dreams, reach your financial goals, and, of course, help you to improve your investment results. So let's begin with chart number one. So we'll start with chart number one. They say that a picture is worth 1,000 words. Well, this one's worth at least that much and maybe more. This is a global look at ETF performance by country and by region. And you'll notice that all regions are positive thus far in 2021. This, of course, is a year-to-date chart. That means it's since the start of 2021. Closing performance is through May 21st. You'll notice the global trend for stocks across the board, again, is up. You'll notice, though, Brazil, EWZ, is one of the lone exceptions, but the losses are modest. And Brazil and some of these other Latin American countries have been crawling their way back to even, and it's been a long, slow crawl back. But nevertheless, there is a good chance that if they continue heading in the direction that they have been, which is up, that they will soon turn positive. You'll notice Canada and Russia have been performing the strongest, and they've got commodity-focused economies, and both, of course, are benefiting from the rising prices in lumber and oil and other commodities. More on commodities in just a second. This chart looks at the U.S. market by size. And just like the porridge bowls and Goldilocks, that tail, you'll remember there was large and there was mid, and I think there was small, if I remember correctly. It's been quite some time. But as you can see here with the U.S. stock market, it's been the mid and the small caps that have been outperforming large caps. And the smaller caps, of course, are more risky than those established giants. And so that tells us a little bit, too, about market sentiment. Right now, it's on a risk-on mode versus risk-off. IJR follows the S&P Small Cap 600, and MDY follows the S&P 400. That's mid-cap stocks. The next chart takes a look at, oh, by the way, I forgot to mention, some of you have asked me about mid-caps and small-cap stocks. We recently did an ETF battle on these two areas. And so I'm going to post the link in the description section below to our full playlist for Season 2 of ETF Battles. And you will see one specifically that we did recently on mid-caps and small-caps is in that playlist. And again, that's the Season 2 playlist. So check out the description section link below, and that way you'll be able to catch that. So let's move on to this next chart, which is something I don't often chart. That's the VIX, which measures market volatility of S&P 500 stocks, VIXY, which is linked to the VIX, this is short-term VIX futures contracts, has been in a downtrend for most of 2021, but since the start of May, we begin to see an uptick in the overall volatility of stocks. Now, the relationship between S&P 500 and VIX is mostly opposite. There can be times when they move in the same direction, but most of the time they don't. And when stocks are rising, as they are right now, VIX will be down. And when VIX is rising, well, then stocks will be down. It's an inverse relationship. And so the stock market, you'll notice, really since May, has had some pops in volatility, but those pops have not been sustained as of now. So we'll have to see if volatility can find its mojo. And if it does, then you're going to see a swift decline in stock prices. So that's something to keep an eye on. Everyone's talking about higher inflation, including us. And as you can see illustrated here is the impressive performance of commodity ETFs, which have been the beneficiaries of rising prices in oil and lumber and natural gas and basic materials. USCI tracks a basket of 14 to 17 different commodities across various sectors. You've also got USO, which is focused on crude oil, and that one has been performing even better. UNL is focused on natural gas. It's also up double digits. This next chart looks at all 11 S&P 500 industry sector ETFs. Did you notice what the trend is saying? It says all sectors are positive year to date. And that's been a meaningful thing because it's meant broad participation by all industry groups in the stock market's rise. Defensive sectors like utilities and staples, as well as more offensive-minded categories, and inflation or commodity-focused categories. In fact, those are the ones that have been leading the way. Energy, XLE, and XLB materials, and of course, financials, XLF, which have jumped higher. Now, some of those leveraged ETFs linked to energy and financials have been top performers thus far in 2021. Check out ticker symbol ERX and FAS. They're not charted here, but those two ETFs have jumped between 80 to 95% in value on a year-to-date basis. And that's usually the time you want to use leverage. When the sectors or the markets that are sharply trending in the same direction that you're trading. Now, if the market is neutral, or if it's trending in the opposite direction that you're heading in, not advisable to be using leverage. So that's Ron's rule of thumb when it comes to using 2x and 3x and 4x leveraged ETFs. This is another reminder of that sector performance, how strong it's been. And then we'll take a final look here at the Fear and Greed Index, which is leaning on the fearful side. We've seen a sharp correction in high growth stocks, SPACs, certain IPOs, but the broader stock market is still mostly positive. So it's sort of odd to have such fearful market sentiment as we do right now when we still have major stock benchmarks like the S&P 500 and Dow Industrials still trading near all-time highs. I guess this tells us more about people than it does about stocks. And right now, people look awfully confused, or they have confused feelings, at least by this reading. Earlier this week, I caught up with Dave Kreinces at ETF Portfolio Management, and here's how that conversation went. We're pleased to have with us Dave Kreinces at ETF Portfolio Management. You know him as a judge on ETF battles. Dave, great to see you.
Hey, Ron, it's nice to be with you.
So you've been bullish on Bitcoin and Ethereum. That's been the right call. So give us some updates. How are they performing?
Thank you. You know, Bitcoin and Ethereum have both been super hot lately with extreme volatility to match. Over the past 9 months, the Bitcoin Trust and Ethereum Trust are up 138% and 236% respectively, while the S&P 500 gained 23%. So these top crypto trusts gave you 6 to 10 times the S&P.
Pretty amazing returns. We've also seen, as you mentioned there, massive volatility to both the upside and downside. So what does that mean for investors? How do they manage all that volatility with cryptos?
Well, these crypto trusts are extremely volatile. Over the trailing 17 months through mid-May 21, the return for ETH was 13 times your money, and it gained 100% in the final month before falling 44% over the following week. So investors should start very small and wait for big gains before adding exposure. Crypto investing can be very bumpy, and the crypto trusts are hard to handle.
One last thing before you take off, let's talk about your favorite tech ETFs, which are QQQ and TQQQ. So do you still like technology stocks?
Well, the NASDAQ 100 has been struggling with rising interest rates and tax reform risk. Still, the unleveraged QQQ is up over 3% this year through May 19th. And over the past 17 months, the NASDAQ 100 three times delivered 114%. Also, small caps and semiconductors have been strong short-term trends. Over the past year, the small cap three times TNA gained 290%, while semiconductor three times Soxel rose by 252%. And at ETF PM, we've been trading all of these funds.
Very good. Well, Dave, thank you very much for the update. We'll catch up with you soon. So here's some key takeaways from today's program. We see smaller stocks beating their larger peers. Tactically speaking, that's been the right place to be if you're overweighting small and mid-cap stocks. Commodities remain hot with crude oil, gas, lumber, corn, all leading the way. We also saw that reflected in the performance of some of those single country ETFs like Canada and Russia, which have been huge beneficiaries of higher commodity prices. Cryptocurrencies, as we discussed in our conversation with Dave Kreinces, is correcting. They've been in a correction mode, but the longer term trend still remains up. And if you're dollar cost averaging, you definitely like those corrections because you get a chance to buy more at lower prices. Also, S&P 500 sectors are all up. We've got 11 sectors, so broad participation by all industry groups in the stock market's rise. And my public service announcement is to have and always invest with a margin of safety, or what I call a cushion. And this is such a fundamental, crucial part of managing your investments that I recommend, and also a framework for investing that I teach on this channel as well as in my online classes. You absolutely must have an adequate cushion or margin of safety. Now, you want to do this from a timing perspective. The optimal time is in a rising market, right? When prices are being lifted higher. Conversely, the suboptimal time to be adding or installing a margin of safety within your portfolio is when prices are crashing, right? And then, of course, when markets are in correction mode, that's a semi-optimal time to be installing a margin of safety. So think of it as insurance, right? You want to have the coverage before the accident, before the crisis, before the fire or the tornado or the earthquake, right? You get the coverage before. You don't wait until the actual event is happening or after it's happened. So it's the same thing with your margin of safety. I've got a margin of safety worksheet for those of you wondering, well, how do I calculate how much of my overall portfolio should be earmarked for safety? Well, you can get that in my online class. I've got a link to that below. I've also got a toolkit for investors. You can get the margin of safety worksheet in that. And again, that's in the description section below. And also, if you'd like to get your investments analyzed and graded by me, I will gladly do that. You want to know the strengths and weaknesses of your portfolio in key areas like your portfolio's cost, its risk, its tax positioning, its performance, its diversification. I can tell you all of those things. Just get in touch with me at portfolioreportcard.com. I analyze and grade all types of portfolios, IRAs, Roth IRAs, 401k plans, 403bs, and these are just some of the fine institutions where I've had the privilege of analyzing and grading your money. Well, that just about does it for today's episode. How did you enjoy the show? Hit the comment section below. Don't forget to subscribe for you new viewers, and check out my Online resources, I've got online classes, portfolio grading service, free ebooks, so much to offer. And again, I want to see you improve your investment results. I want to see you live the life that you deserve, and also to have some peace of mind along the way. Well, I look forward to seeing you next time. Coming up this week, we've got another ETF battles. I also owe you an episode on dividend ETFs, so stay tuned for that. I should have had this out to you about 2 weeks ago. Apologies, but without fail, I will have this episode ready for you. I've been working on it, done a lot of research, and I know you're going to enjoy it. Well, that does it for today's show. I'm DeLegge with ETF Guide TV. Thanks for watching. We'll catch you next time.